In this video, I'm going to show you something here crazy. Absolutely crazy. It's so crazy, in fact, that you've probably clicked on this video thinking there's a high probability that I'm insane. Perhaps I am, but but I'm going to walk through the case as to how and why Bitcoin is going to absurdly high price targets. In fact, we're talking about $510,714,285 per coin. I'm going to break down the math and why I think that's the case and how we get there. So without further ado, let's have a little lesson in prices and economics here, okay? Let's take something like real estate. These are all poorly drawn houses here. We have 9 little houses there. Let's say each one represents 10 houses. So we have 90 houses here being lived in, and we have another house, aka 10% of the houses, over here on the market. We'll say 10% of the houses are on the market, 90% are off the market, okay? Now, a lot of people misunderstand how prices work and how market caps work, okay? First, we have to explain what that is, okay? Market cap, price. What is a market cap? Market capitalization of an asset or asset class is the total value of all the underlying assets. So, if we have each house here, let's say each being worth $100,000, that means that we have a total market cap of $1 million for these 10 houses here, okay? All these houses, 10 houses, each one is worth $100,000. That's a market cap of $1 million. It is 10 times more than the price because there's 10 times the houses than just the one on the market. So that means if we have price, say, has lost $10,000 of value, let's say your house is now being marked down 10%, that means all the houses on the market are being marked down 10%. Or all the houses' market cap is being marked down 10%, so down $100,000. This is how prices work. The market cap is downstream of price. The price determines the market cap. Let me say that again, because this is really important for later in the video when talking about Bitcoin. Market cap is downstream of price, and price is determined by what the market is willing to pay for the asset that is available to be bought. Okay? This is irrelevant. The price and value of that is determined as a function of that, okay? But people need to understand, if there's more and more cash chasing the remaining houses on the market, the total market cap will increase, okay? And people can say, oh wow, there's all this money being created, all this money being printed. That's exactly why prices go up, because you have more and more currency chasing a smaller and smaller number of assets that are going into the market, okay? This is really important. Now let's go over to Bitcoin. It's a similar idea here, okay? If we have instead this orange circle, let's say that's a Bitcoin or a percentage of a Bitcoin, and we have all these other Bitcoin that are off the market. We have all these other sats that are off the market. Again, market cap, the total value of all these Bitcoin is determined by the price, the currently traded price for the Bitcoins available to be bought or sold. Right now, at the time of recording, Bitcoin is roughly 30,000 US dollars per coin, for a total market cap of about $550–600 billion or so. So all the Bitcoin in existence is worth just under $1/2 of $1 trillion. The market cap is worth that. There has not been $500 billion of cash chasing Bitcoins. And people all the time misunderstand this, that because Bitcoin's market cap is $500 billion, that does not mean that $500 billion US have been exchanged for Bitcoins. Because again, if you have 100,000, if you have a certain amount of money chasing the remaining supply, okay, it gets multiplied by the factor that's off the market here, okay? So, again, the more Bitcoins that are off the market, the greater the impact the price fluctuation of this has on the market cap of Bitcoins, and vice versa. You know, this is how assets, not just the upside, but the downside, have massive downward swings, because it takes very small changes on the number of Bitcoins on the market to force price up or down. This is why the Bitcoin halving is really important. Let's say that we were to cut the amount of Bitcoins in half. All of a sudden, that means that if you still have X number of dollars chasing the remaining Bitcoins on the market, well, now all of a sudden you're forcing the market cap up, because there's a greater inflow of cash for a lower supply of Bitcoins, even if the halving is a perpetually smaller amount of all the Bitcoins remaining on the market. All it takes are very small changes to have massive price implications. Let's get one more example of oil. In the lockdowns in 2020, oil prices went negative. This became worldwide news. People freaked out. How could oil prices go negative? And it's again because people don't understand the basics of market cap being downstream of price. Forget real estate. Let's say this is oil. If you have a little bit of oil sitting in a harbor here at the beginning of a lockdown, where it's just sitting on ships costing money just to sit there and wait when meanwhile the economy's locked down and there's no demand for oil. All of a sudden, price goes negative. Price goes negative and market cap just completely gets gutted. And so in the same way with Bitcoin, the general thesis that we have, that I personally have with Bitcoin, is that the amount of Bitcoin on exchanges, the amount of Bitcoin willing to be sold is just going to shrink and shrink perpetually, getting smaller and smaller and smaller, becoming ever more and more tiny as each halving goes by again and again and again, until there's just a tiny little bit of Bitcoin remaining on the market. And so as over time, cycle after cycle, halving after halving, decade after decade, there is more and more demand, and more people understand that. They're not willing to sell because they also believe in the future there'll be less and less supply. That's how market cap goes parabolic. So how do we get to that? Well, let's say people decide, I want a 2% allocation. I want a 2% allocation to Bitcoin. I don't want to go all in, but 1, 2%, some people maybe do 1%, some people maybe do 3%. A lot of people still have 0%, and a lot of people do 20%. But let's say it averages out that 2% is the average allocation people decide to make. Well, let's do some numbers here. Okay, let's take real estate, stocks, bonds, and gold. That's $250 in gold. That's $1,000 billion for bonds. That's $900 billion for stocks, and that's $5,000 billion for real estate. More or less, it depends who you ask. It depends when you ask it. Okay, these numbers are rounded. These numbers are oversimplified, just for the sake of example. Okay, I know I'm going to get hate in the comments for that, but for the sake of simplicity, 5,000 billion, 900 billion, 1,000 billion, 250 billion. Add that all up, you get $7,150 billion. Now let's assume there's a multiplier of 3. Why? Because we're printing more currency units, we will perpetually create more currency units. So let's say over the next couple decades, perhaps, the globe increases the number of currency units by a factor of 3. So that means, on average, house prices go up by a factor of 3, stock prices go up by a factor of 3. Everything on average goes up by a factor of 3. Given that everything's doubled in the last 10 years-ish alone, I don't think that's unreasonable. Okay. Again, keep in mind, as we create more political currency units, and they chase less and less houses on the market because less people are willing to sell the real estate because there's more and more cash, and people realize, I really should hold on my house because even with interest rates going up and everything else, it's like even with the volatility, I should just keep holding it because less houses are being built. And so as more and more gets wiped off the market, it shrinks and shrinks and shrinks. The more we create that currency units, we don't have to create 3 times the currency units. If we just create a little smaller percentage of currency units, it can chase up market cap by a factor of 3, therefore increasing the nominal allocation of Bitcoin by a factor of 3. So again, let's take 2% of that, which is that number, 7,150 billion multiplied by 3. That's roughly 21,000 billion. Now let's take a multiplier here. Okay, this over here is a 10x multiplier. Okay, this is a 10x multiplier. When the price goes down by a factor of 1, the total market cap goes down by a factor of 10. And likewise, if this were to be a green plus 10K, this will go up by a factor of 100K. So in the same way that when 1 unit of currency, 1 unit amount of currency is chasing the remaining supply in the market, the total market cap goes up by a factor of 10. Because again, market cap is downstream of price. I have to keep saying that again and again and again. But right now, probably way back in the early days, there's nobody to know this, but maybe Bitcoin had a 2 to 1, 3 to 1, 1 to 1, exponential here. Maybe it's 5 to 1. Right now, it's 118 to 1, according to Bank of America. This is not me, the YouTuber, saying this. This is Bank of America. Bank of America has said publicly that they believe that for every dollar that was coming after remaining Bitcoin supply on the market back in, I think it was 2021, that 118-fold impact on the market cap. Okay. Now, the reason it is so great is because, again, using our basic example here, there is an exponentially decreasing amount of supply of Bitcoin on the market, and there's an exponentially increasing amount of Bitcoins being held and hodled and kept off the market. And so that's 118 to 1. Here's my question. What happens when governments begin directly printing currency units for the remaining Bitcoins on the market? What happens when we go from 0.1% adoption to 1% adoption? We 10x the number of people buying Bitcoins off the market. What happens when the Saudis and the oil people and everyone else comes in? What happens when it's not just Michael Saylor going on podcasts and talking about Bitcoin, but we have a new Michael Saylor level entry every week, and then maybe one every even couple days, and eventually in the future, maybe even every day, we have a new company, we have a new country, or we have a new billionaire or mega rich person that's allocating as aggressively as Michael Saylor is. And what happens when there's not just one 24-year-old YouTuber weirdo talking about Bitcoin, but there's tens of millions of people just like me with average, modest lifestyles, modest incomes here in the West. Like, what happens when all this skyrockets while at the same time supply continues to get draining off the market? Like, we're only at 0.1% adoption. What happens when we get a 500 to 1 multiplier here, okay? That may sound absurd to people. That may sound ridiculous. But you game theory this out for years and decades, to me, that doesn't seem that unreasonable. Assuming this is true, assuming Bank of America is correct, and it seems to me that that's true, that doesn't seem that unreasonable. So before we get to the $510,714,285 Bitcoin, we have to keep these things in mind. That market cap is downstream of price, and that it's a reigning supply, or the demand for the reigning supply in the market that determines the value of all the assets on the market, and that we have to do the math with a 2% allocation into Bitcoin. Now, each one of these steps seems reasonable to me. This seems like a reasonable economic assumption, and it's true. That 118-to-1 multiplier from Bank of America seems reasonable, and I do think it's true. And a 2% allocation into Bitcoin seems reasonable, and perhaps there's an argument to be made that these numbers will go down as the demand for these things goes down 2% in exchange for Bitcoin. But ultimately, every single step of this argument, I think, individually, makes sense. So then we come to our final conclusion here. With all of that said and done, what is the market cap we get when we do all the math out? We get a 10 quadrillion, not trillion, quadrillion, 725 trillion market cap. It's an absurdly large number. It's one that I can't even properly explain to you. But we can divide it out by 21 million Bitcoin. If we take that 10.7 quadrillion market cap and divide it by 21 million Bitcoin, we get a price per coin of $510,714,285 per coin. That's what we get. And now you might be thinking, that's absurd, Luke. You're just trying to pull numbers out of a hat. You're just trying to make stuff up. It's like, okay, fair enough. Fair enough. What's the probability I'm correct? Maybe it's a 1% probability I'm correct. Okay, 1% probability that this is true is $5,107,142.85, if you want to be that specific. Okay, so let me say this again. We know market cap is downstream of price, number one. Number two, we know the supply of Bitcoin is draining because it has been draining for years and years now, okay? We know, number three, that with a 0.1% global adoption, only barely 1 million people that are buying Bitcoin in self-custody and actually true Bitcoin users and adopters, maybe 1 to 3 million true Bitcoin adopters, with just that little adoption, only 15 years in here, Bitcoin has gone to $30,000 per coin US, despite only starting out at 6 cents. Okay, here's my question. Do you really think that if supply is draining now, that it won't just continue to drain in the future? Do you really think we're going to stop printing money? Do you really think a 3x multiplier in the political currency units is really that much of a stretch? Do you really think that individually, each of those steps getting to this are that absurd? I mean, this seems absurd. I agree with you there. This is just ridiculous. But logically, it kind of makes sense. And even if I don't know I'm right here, I know it's a 1% probability. That's a $5 million Bitcoin. That's a 150x from today, 30,000 USD. Okay, that's something to think about. Even if I'm off by a factor of 100 to the upside, it's still 150x upside from here. Okay, and I may not be off 100 to the upside with all those many zeros. I may be down. I may be down by orders of magnitude, because here's the question. That's 2% adoption. What happens to 10% adoption? Or 2% allocation from those other assets. What happens to 10% allocation from those other assets? Or even a 4% allocation, okay? What happens if it's no longer a 118 to 1 or a 500 to 1? What if we eventually get to 1,000 or a 10,000 to 1 multiplier? If we go out enough years, enough decades into the late 20th and late 21st, early 22nd century, is 1,000 to 1, 10,000 to 1 unreasonable? Maybe it is. Maybe it's not. Okay, but what about the multiplier of political currency units? What if it's not just a 3x? What if it's a 5x? What if it's a 20x? What if it's a 50x in political currency units? This may be unlikely, but is it unreasonable? This may be unlikely, and it's definitely unreasonable for the near future, but go out 80 years, is that improbable? And 50x political currency units? I mean, if we have multiple nations that have hyperinflation, and we have multiple G20 nations that also have persistent inflation, and we have the mega countries like US and China go above 3x, maybe do a 5 times. I mean, if we just do that, 50x is no longer that unreasonable. And we know this is going to happen. It's just a question of matter of time. Is it going to be in 10 years, or is it going to be in 100 years? We know that this is going to happen. This could happen, and this doesn't seem that unreasonable. So if any of this is true, you don't need all three, if just any of that is true, Then forget this 510 million number. We're talking about billions. We're talking about trillions of dollars per Bitcoin. Granted, of course, if we're pricing this in terms of political currency, this will be worth less and less. Obviously, this won't really be worth 500 million, maybe a tenth of that, maybe a third of it. But still, my point is, I don't know where Bitcoin's going. But I do know that as long as Bitcoin remains secure, as long as there's a continued demand, and as long as Bitcoin survives and there's less and less supply, the multiplier will go up. In addition, the number of political currencies in existence will go up. And we know that market cap is downstream of price, and so we know that absurdly high price numbers and absurdly high prices are not only feasible, but perhaps inevitable. It's just a question of when. And so it's incredibly important that as you consider these massive numbers going up, you have to get your self-custody down. Because if we have massive green candles to 500 million, to 5 million, even to 500,000, if we have massive green candles to numbers that perhaps are entirely reasonable, you have to have your plan before then. Get off zero before this happens. Get your self-custody down before this happens. If you desire a single sig setup, get it soon. Get it before massive green candles. If you want a multi-sig setup, get it soon. Get it before massive green candles up. If you want to have a collaborative custody partner in your multi-sig setup, if you want an estate plan with your setup, if you want to learn more about Bitcoin, whether it's education, multi-sig, collaborative custody, whatever, just do it. And yes, I do provide collaborative custody multi-sig services at the Bitcoin Advisor, but you don't have to use me. Just find somebody willing to help you to do this and to do it properly. Because if this is true, it's going to absolutely blow people's minds. In the same way that the real estate has melted faces in the last 10 years because people don't understand that market cap is downstream of price. In the same way that the stock market or that the big 7 tech monopolies or all these things, the reason they go so much higher than people can possibly expect and the reason they're going so much higher in the future than people possibly expect is because people don't understand this. And the same thing is true with Bitcoin here, except it's far greater a big of a deal because it's so much more capped in supply and because it's so predictable in supply and because therefore that people are more willing to hoard the Bitcoins off the market and therefore increase the multiplier of the market cap from downstream of price. It's just, please, get off zero, get your self-custody down, and do not wait because who knows when this is going to happen.